Good afternoon, Tony Virtue speaking, and happy Christmas to you all. Obviously a somber few days in the city. Best thing we can do is get on with what we do for a living, which is to help you with your money. Same day there was the half-yearly statements from the Treasurer came out, and that's covered in detail in the newsletter. The short version is that there's an expectation of an increased deficit of $10 billion a year for the next 4 years. Primarily caused by the decline in iron ore price. There's a few other bits and pieces in there. The first graph just shows you the net debt that will mean that we'll incur. Effectively that's government bonds that are issued to fund debt. Now while interest rates are relatively low, that's probably manageable. If interest rates were to go up, that would be quite a lot harder. Another area at the moment obviously is the movement in oil price. Some of you have been following that carefully. The positive out of that is petrol prices being lower. It does cause quite a lot of economic instability around the world. Russia particularly at the moment, the ruble has fallen very, very rapidly, and depending how this plays out, this could impact quite severely on sort of global political tensions. So expect them to find some middle ground at the end of the day. In the short term, that's fairly volatile for markets. Santos locally fell 40%, and I think caution is the word at the moment. Our local GDP figures weren't good for the quarter. If we stripped out the Sydney CPD and property development in the city, the numbers were very, very ordinary. The practical effect of that now is the futures market is expecting interest rates to fall in February and March. If that is the case, that will probably be good for shares and for property because the cost of borrowing will be cheaper. It'll be adverse for term deposits that will continually decline. It also puts retirees in a fairly invidious position of having to take higher levels of risk to get income streams from dividends or from rent from property rather than from fixed interest. So forcing people up the risk curve there. Interestingly, at the same time, we're expecting interest rates to rise in other countries, so this is very much a domestic issue at the moment to deal with. On the positive side, the trade agreements we've got now with Japan, with China and with South Korea should help our exports. The Australian dollar falling as well should help our exports. So this is a time to be careful, certainly not a time to be too courageous, if I could say that, with investing. So that's, I think, enough for this year. It's been great to work again with you all. It was great to see so many of you last week at our function in the city. We wish you all well and happy Christmas and New Year, and we'll see you in January. Take care. Bye-bye.